We have officially entered a bear market when it comes to the S&P 500, which is kind of scary, right? Because people were talking about bear market earlier. We were not in bear market for that long. Like, we hit it, and then we came right back up, and then we actually hit it again. We came right back up, and now we're in it again. But this time, it actually looks like it's going to get worse. What's up, everybody? Welcome to episode 27 of the Bag Talk Show. So today, I know y'all have fear in your hearts. Y'all have fear in your wallets. Everything is going crazy. There's blood on the streets. There's madness right now, and we totally get it. And that's why we want to make an episode to relax your nerves right now, all right? So today, we're going to talk about the stock market, the crypto market, the real estate market, what the Fed plans to do, and then we're going to give you guys our opinion on what we think you should be doing right now. So let's just get the ball started right now, bro. What is going on in the crypto world?
Crypto, boy. Crypto took a beating this past weekend, early to start the week. It's spooky out here, right? We've seen Bitcoin just hit a level it hasn't been since 2020.
Yep.
Feel me? The crypto market cap altogether went below $1 trillion. And then Celsius, we see it shutting down its exchange shutting down withdrawals at its exchange. It's bad out here, bro.
Yeah, and honestly, right now, I know a lot of you guys are thinking, should we sell our crypto, right? Like, even you saw Ethereum drop. And by the way, we actually said what Ethereum would drop to because we looked at the charts earlier, and it was pretty obvious with what was going on. But I don't personally think it's time to sell.
Nah. I would not advocate for selling. It's funny, like, I know you've heard us saying time and time again about dollar cost averaging, but like, for something that you believe in, you have to dollar cost average it over time. Like, we know crypto's fallen 80% before. This is not like a new thing. Mm-mm. Like, we've tried to prep you about this prior to on the channel. We told you about the drawbacks that crypto has. It does major like collapses like this. But we've seen these major run-ups too, right?
Yeah. Now, at the end of the day, what you have to think about is if you believe in an asset and you want to hold it for a long period of time, then you have to dollar cost average it. And we've said this multiple times on this channel, but we are investors. We're not gamblers, right? So don't be out here putting money into crypto that you know nothing about. Like, their ABC coin, this random NFT, like, there's no need to do that with your money. Do you want to lose your money, bro?
I think people want to lose money, bro.
That's what I'm saying. Like, you guys have to be careful what you guys do because you can't just throw money in the air and be like, yeah, I'm going to make more of it. That's not how it works. So just be careful. I personally am going to continue DCA in Bitcoin and Ethereum. I've been very vocal about that strategy for a very long period of time. And I think you're doing the same.
Absolutely, bro. And the thing is, what people have to understand is, like, I know we want a crypto to be this big, like replace the dollar. You know, bro. It's not that yet. We're not there yet, right?
I don't think it's going to happen either, personally.
Exactly. They're not going to let it happen in the first place. So understand that crypto is a risky asset. Risky assets get sold off in economic times like these.
Yep.
Like, we talked about quantitative tightening, interest rate hikes, everything. When liquidity is drying up in markets, people sell off risky assets. Crypto is the riskiest asset class out right now.
Yeah.
That's why it gets sold off so hard. But stop acting like it's just crypto that's getting sold off. Everything tech goes first. Tech gets sold off harder than other sectors.
Yeah. And that's actually what I want to talk about next. Mm-hmm. So is there anything else you want to add on to crypto?
I just want to say, like, so I wouldn't take that as a reason to, like, not believe in crypto, knowing, like, this is driven by these economic times we're in. When things rebound, crypto's going to rebound the hardest. Watch the gains that crypto has when everything stabilizes.
Yeah.
It's going to outpace everything.
I think that we are still believers of crypto. I think it really does offer a bunch of solutions that we're suffering right now to the problems, that we're going through. So I don't see that changing. So we're still going to, continue DCAing. But now let's talk about the stock market, right? That has seen a lot of red. We have officially entered a bear market when it comes to the S&P 500, which is kind of scary, right? Because people were talking about bear market earlier. We were not in bear market for that long. Like, we hit it, and then we came right back up, and then we actually hit it again. We came right back up, and now we're in it again. But this time, it actually looks like it's going to get worse. So I just want to, make that very clear.
Yeah, because people have to know a bear market is when you're down 20% from a recent high, right? And now it seems like you said, we're going to be there for a while. And the NASDAQ, which has a lot of tech in it, has been in the bear market for a while. But like you said, the S&P just recently got there, the Dow and everything, right? Now, it's a scary time as far as stock market goes, but like we said, the liquidity is drying up. We warned you about this happening. We warned you about what quantitative tightening would do to the stock market and to just all equities, you know?
And honestly, right now, I know people are trying to buy the dip, which I'm super proud of you guys, right? Like, if you guys are buying right now, that's great. However, please don't throw a boatload of cash into an asset like Amazon and then you get upset that it goes down 45%. I'm not hating on Amazon. I'm just letting y'all know that if you throw a boatload of cash right now and it goes even lower, you're going to be sick. And you're going to be like, damn, why didn't I just DCA? So yes, definitely buy heavy on the dips, but continue to buy on a monthly basis if you believe in the stock. Like Amazon is just one example. I know Target has something too, right?
Yeah, bro, because this is the thing with these companies, man. Like let's talk economics for a brief second, bro. When COVID came, they had to flood the markets with liquidity. And then also we had supply chain issues. So companies like Target had to stock up on supplies. Crazy, right? Because we all needed everything we buy from Target. We get everything from Target and Walmart.
Yep.
Both of these companies are suffering right now because they did so much, like they put so much effort into getting supplies. Mm-hmm. Now at this point, they're actually oversupplied. Like it's funny, Target and Walmart are oversupplied. And then it's messing up their financials. So it caused some sell-offs, but it's like a lot of companies right now are suffering when it comes to they either have too much supply like them, or they don't have enough supply. Like everything is just so messed up right now, bro.
And that's why I don't think it's going to improve in the next week or 2 weeks, month, right? Like we're going to be in this period of time, which is why, we're going to get into this later in the video. So you have to make sure you watch the whole video because we're going to give you exactly what we're doing. But that's why I think besides the other things we're going to go over, you gotta just DCA. It's very simple. There's no secret to it. We don't have a secret sauce. We can't see the future, right? No matter who you follow, who's an amazing investor, they take losses, they take gains, they continue to average out their investment no matter what. Those are 3 things every investor has to go through. So you're no different.
Yeah, because nobody can predict the bottom. Nope. Nobody can. I don't care who you listen to. Nobody can predict the bottom because if they could, they would be a trillionaire.
Right? No, 100%. You would bet
your whole life savings on that bottom, knowing that it's gonna go up. Nobody knows.
Exactly.
Like Newski said, dollar cost average, please.
Right. So now that covers 2 other things. Let's move on to real estate, right? Because I know there's a lot of people who are looking to buy some homes. We already covered real estate in Rookie Mondays, but we've been talking a lot about supply and demand, right? And we know there's a supply shortage right now. Mm-hmm. However, now demand is actually going down, right? Because of the high interest rates that have been put on because of the Fed, right? When the Fed increases interest rates, that's going to impact the interest rate when it comes to mortgages. So now interest rates are going up. People who were looking to buy initially are saying, nah, I can't afford this no more, right? So now there's a problem on that end.
Bro, it's tough right now. It really is. I feel so bad for first-time home buyers. Like, you're just getting priced out. I also feel bad for people in markets where they have to deal with people like New Yorkers, like us. Or,
I was going to say, I'm in New York. I'm not going to lie.
People like us or people from California are just expensive markets like those moving into cheaper markets and throwing the prices all off, right? Mm-hmm. Like, now your comps are way more than they ever could be. People in those markets can't even compete with a New Yorker because you selling your home over here for $700,000,
right?
And buying something down there even bigger for $200,000.
And I think that's the thing. Like a lot of people right now are thinking, okay, I'm going to buy when the prices fall. Well, you have articles like this coming out right now and saying rates and the hike right now could actually make prices go up $100,000, and then the home sale prices themselves are actually going up, right? They're not stopping because think about it. There was a supply shortage, okay, which was causing an increase in the prices because there's not enough supply and there's a very, very high demand. So yes, price goes up. Demand slows down, right? But the supply, since it was already small, it got bigger, right? But it wasn't like it got huge and there's all of a sudden more houses on the market than there ever were before. That's not a thing. That it's just not available. So that is still causing for prices to go up. And then on top of that, you're dealing with interest rates. Like just think about it. A house that was $100,000 earlier with a 3% interest rate, you were only paying $3,000, right? Now, the house value has gone up, plus interest rates have gone up. So you're losing the more you wait to buy a home.
Yeah, and then people with big money, like institutions, are still buying up these single-family homes. Don't get it twisted. So you're still having buying going on in the real estate market. Like you said, the supply might have picked up a little bit, but there's still a lot of big money out there buying. Like
Right.
they still severely outweigh the amount of supply that's out there.
Exactly. So if you're someone who has the funds to buy a home, I don't think you waiting or getting a adjustable rate mortgage makes sense for you, right? Like, don't do all those different things and try to get fancy or try to predict the market. That just never works for you. Over a period of time, we've showed you multiple times, the price of a home does go up. So why are you waiting if you have the money? And if you don't know if you have enough money, make sure you download our free budget template when it comes to real estate, right? We literally show you a huge calculator that you can go through that lets you know if this is a good deal because it shows up as green, or if it's a bad deal because it shows up as red. Simple as that.
Yeah, for real. Everything is in there in the description for you. And so when it comes to like real estate, like we said, make sure your numbers are right. I don't want everybody just going out there buying everything. Please, numbers, like do the whole number check like we discussed.
Yep. So now let's transition into what the Fed is doing. So we covered stock market, we covered crypto market, we covered real estate. Let's talk about the Fed, right? So what had they done with interest rates already?
Yeah, so they've already hiked it a couple times, right? We've seen a 25 basis point hike, we've seen 50. And then now we're about to find out. By the time this episode came out, you've already heard it.
Yep.
Whether they're gonna do 75 or 50 or none at all, but they're gonna
they're gonna increase
hiking,
it,
yeah.
right? Like we saw Jeffries come out and say that there's gonna be a 75 basis point increase. They've already came out and said that before it happened. Mm-hmm. So there's rumors going on about this and stuff. Let's just say they do that. What do you think is going to happen in the market if we're already struggling? And the Fed has said they're not stopping here. They could actually continue to raise interest rates.
Bro, I mean, what people have to do is check the companies they're invested into, because this goes directly to them. Like, understand that companies have to borrow money to expand. So companies also have to deal with interest rates. There's something called junk bonds, right? So a company, when they need money, they actually will put out a bond so they can receive money. But when you have bad financials or you're not a trusted company, you're actually called a junk. You get junk bonds, right?
Which makes sense.
Yeah, exactly. So they don't trust you with money, just like they wouldn't trust somebody who's bad with their credit with money, right? It's the same thing. Companies have their own credit. And so companies like those, if they couldn't be profitable before, y'all think they can be profitable now? Man, listen, companies have gone to zero. For example, Blockbuster, going to zero. Don't ever think your stock you're invested to can't go to zero. Please get into better companies.
And to piggyback off of that, to be honest, that's why we always tell you guys you want to invest in the best companies. Like, we're not out here telling you guys companies, because look, you guys don't have to take our picks. We're not financial advisors, right? We're just telling you what we believe in, because this is stuff that we've studied. So when it comes down to it, we're not investing in junk companies. You look at a balance sheet, you see if it makes sense. You look at the CEO, the COO, the entire C-suite of a company, see if they are actually smart people who have led before. And then you look at the performance of a company over the last 10 years, 5 years. You see what their future plans are to see what they're innovating in, right? And that's how you pick a company. We've gone through all this with you guys in Rookie Mondays before, so check that out if you haven't done so already. But when it comes down to it, the Fed controls what's happening. So by the time this video has already been out, you're going to see what the Fed does. So don't be surprised if they go with the interest rate hike and then all of a sudden we see red in the market more than we've currently been seeing.
Yeah, for real. And I want everybody to understand that's why you've seen so much red thus far, because there's so much uncertainty in the market. Notice how we don't know if they're going to do 75 BPS or 50 BPS. No one knows. So whenever there's uncertainty in the market, that's when you see all these crazy sell-offs. That's when you see the VIX go up. The VIX is the volatility index, right? It's going to measure how much fear there is in the market. When it's going up, you can type in VIX on Google to check it. When it's going up, believe me, there's fear in the market, and that's when you see stocks going down, crypto going down. All right, so make sure that you guys understand why there's red. There's red because of things like this Fed meeting we're talking about. Nobody knows what's going to happen. So until we get some stability and certainty, it's gonna be a bloody summer,
right? Because it's not only there's another war going on, or like there's a supply chain. There's a lot to it. We're in a lot of different so-called bubbles. Like, we're not trying to scare y'all. So let's just move on to our opinions,
we didn't
right?
even talk about the credit crisis and there's a lot going on.
There's a lot to it, So let's just now basically transition into what we are doing. So you want to tackle that first?
Yeah, I mean, we're doing what we always said we was going to do, right? We continue to buy. We continue to buy. At this point in a bear market, as things continue to plummet and nobody knows the bottom, the best thing to do is dollar cost average. Like, because you don't know when the bottom is. So just holding a big old stack, just waiting for the bottom, you might end up missing the bottom. That's what happens a lot of time. Exactly. Now you're buying things higher than you would have. just dollar cost average your way down. But at the same time, I still want you to stay cash heavy.
I was just about to say, yeah.
Yeah, you feel me? I think it's important in this time period to stay cash heavy, not only for investing, but like, yo, if we hit a recession, jobs are leaving. You know what I'm saying? Like, you got to make sure you could sustain. You want to have a big bucket of cash just in case.
Yeah, and also, like, to add on to that, right? Basically, I don't think we realize when we pray for a recession, because I've been seeing a lot of memes on Twitter and Instagram talking about, yo, like, should I be buying the dip? I can't wait for the dip. I can't wait for the housing prices to come down. Bro, you realize if that happens, you may get fired. You realize your parents may be struggling because of their retirement funds. You realize if your grandparents are still alive, they're going through their retirement funds. If they already haven't pulled them out, your uncles, your aunties, everything. That's going to cause a big problem. Like, people get divorced. So us praying for a recession and asking home prices to come down and people leaving their homes, that's not good news. Like, it's actually scary. So we can't pray for stuff like that.
Suicide rates go up and everything.
Exactly. Everyone relies on alcohol. Everyone relies on, like, smokes all the time. There's drugs all the time in the market. Like,
that's also why alcohol stocks go up, by the way, in recessions. Something to keep your eye on.
This guy just plugged
just throwing it in
from
there.
A non-drinker.
Guys, I don't even drink, but I'm gonna make money off his drinks though.
That's crazy. But that just wanted to go on that rant really quick because it's very important for you guys to understand that, right? On top of obviously DCA, have cash on hand, but just keep this in mind, right? Have some type of diversification, like whether it be a business that you're investing in, right? Make sure you're continuing to do that. It's not all about the stock market. You could look into real estate, you could look into crypto, you could have gold. There's a lot of things that we've covered on this channel to help you get through this tough time period. Like, it's not just sit and invest. Like, you can make money in other ways, like options as well, right?
Yeah, it's funny. That's what I was going to talk about next. Like, understand, like, there's something other than being just a simple stockholder, because people are like, dang, when do I take profits? How do I really make money with the stock market if I'm supposed to be long term? I get that. One, there are ways to take profit along the way, but there's even better ways to make money, like a lot of money. Like, people, options, if you learn options trading, you're literally making money as the market goes down or up. You make money in any direction, meaning you can make money literally every day. When I say every day, I mean literally every day via the stock market. It's a skill. Like, if anybody can learn it, you can learn it. And
we brought people on, like, shout out to Seven, right? We brought him on who actually has mastered options trading. We brought Lawrence on who has mastered options trading. Like, we brought these people on for you on the platform so y'all can learn from them. Another thing I just want to add on, right? For people who are panicking, since the S&P 500 has come out, on average, it's been up 10%, bro. On top of that, when you think about it, the market has gone up 70% of the time. I'm reading that straight off the screen right now so y'all understand this. Like, this episode today is meant for you guys to just relax and don't panic, okay? Like, that's what we want to just make sure you guys understand all this.
Yeah, bro, like you said, it's going up over time. Think about the stuff we've been through. We've been through 2008 recession. We've been through world wars. We've been through all types of wars. We've been through COVID. Bro, like, when you really look at it, we've been through a lot, and the stock market always continues to rise over time. So please don't be one of those people that sell everything and then regret it, because they always regret it.
And don't be that person that says, I should have bought the dip. Bro, like, what are you doing? So if you guys understood everything we just said, and you guys feel way more calm now because, you know, we did help you guys understand a few things and what we're doing personally, y'all gotta do us a favor. Y'all gotta like, comment, and subscribe to the channel. Plus, hit that little notification bell because we drop
2 videos a week,
and you don't want to miss them. We got a huge week coming out next week. We're gonna, save some news for you guys. So make sure you stay tuned. But until then, peace.
Peace.